Good morning, students. You are here because you want to listen to the explanation for the 4E5N POA mid-year exam, Paper 1, Question 4. Paper 1, Question 4 is basically an incomplete records question. Alright, how do you know it's an incomplete record question? They immediately tell you she does not keep a complete set of accounts. So when you see this line, right, you know that it's an incomplete records question. Alright, so I leave you to read the question on your own. Alright, if you have read the question on your own, what you can do is I will go through the information with you. Now, if after reading the question, you realize that they have given you for 2 financial year ends, some assets and some liabilities. Alright, now later on you have to decide which one is an asset and which one is a liability. Now, when you read the question, you also see some additional information for during the year. So during the year, all these transactions happen. Now, when you see these transactions, you see that these transactions mainly affects drawings or capital. Now, when you see this, you have to remember you should not adjust this. Okay, all these transactions affecting drawing and capital, don't adjust. Alright, you don't adjust them because later on they will be included in your statement of adjusted profit or loss. Alright, so let's take a look. She took goods 1350 for personal use. So since she has taken goods 1350 for personal use, this, the double entry, will be drawings affected. Alright, so drawings will increase by 1350. The other account is inventory will reduce by 1350. Now, at this point in time, everybody would have this desire to want to go to your inventory and minus off 1350. But do not do it because this will be adjusted in your statement of adjusted profit later. Also because if it happened during the year, the inventory is already not in your business. At year end, when they counted the inventory, it's already not there. So because it's been taken away already, so you do not minus away from your inventory again. Alright, now next, you also see since 1st of January, she has been paying for her monthly personal insurance. Now, the important date is here, 1st of January. A lot of students ignore this 1st of January and you see the word monthly and immediately assume that it is for 12 months. It is not. The year end is 31st of March. So it only means that she has been paying for her monthly personal insurance from 1st of January to 31st of March. Alright, so that is the first thing that you need to take note of. So what is the drawings like then? You should increase drawings by $45 times 3 months. Alright, and the other double entry is cash at bank decreases by the same amount, 45 times 3 months. Okay, again, please resist deducting this from your cash at bank amount because the money has already been taken out. It happened during the year. Finally, Sanza invested $2,000 of the personal fund into the business. Alright, so when Sanza does this, it is capital increased by 20,000. The other account affected is cash at bank, also increased by 20,000. Again, do not adjust because the 20,000 is already in the business. Alright, already has been put in. Now, in addition to that, so we are done with during the year transactions. Now, it's also told you that at year end, alright, At year end, it was discovered that there was income received in advance, and this had not been adjusted. Now, because it had not been adjusted, you need to adjust it now. All right, so how do we record? We should create a new account called income received in advance, and this is year end, so it's $410 at year end. All right, and income received in advance is a current liability. It's a liability. All right, next, depreciation had not been recorded. Now, please remember that you will only record the balance sheet adjustments. So the double entry for this depreciation, you should record depreciation increased by 9460. The other account is accumulated depreciation increased by 9460. So which one should I record? I should record the accumulated depreciation. Alright, why do I not record the depreciation expense? Because this depreciation expense will be recorded in your statement, in your profit, sorry. It will be adjusted in your profit, so you don't need to record this because it is going to be calculated for you. Later, you are going to use the statement of adjusted profit to calculate your profit. So because your depreciation affects profit, you don't need to adjust it anywhere. So let's go and record the accumulated depreciation now. There's no accumulated depreciation account, so you will have to create a new account, accumulated depreciation for motor vehicles, and this is 9460. Now, accumulated depreciation is a contra asset. Right? It's a contra asset. Okay. Finally, they have utilities expense is still outstanding, right? Because it's still outstanding, you have to create a new account called accrued utilities, and this is for how much? $190, and it's a liability. It's still outstanding. All right. Now, what you need to do next is to calculate the opening capital. Opening capital is quite straightforward, so I'm not going to show you how to calculate it. Let's just take a look at the closing capital. Now, with the closing capital, many students make the mistake of including only the current assets or the current liability. Now, this is not a question on working capital ratio. So you do not distinguish between current asset and non-current asset. All the asset and liabilities need to be included when you calculate capital, because capital equals A equals L plus OE. Alright, so you need to include all the A, all the asset, and all the L, all the liabilities. So motor vehicle is an asset, cash at bank is an asset, trade receivable is an asset, inventory is an asset, liability is trade payable is a liability, bank loan is a liability, bank overdraft is a liability. And then of course you have your income received in advance, accumulated depre, and accrued utilities. Alright, so using all these, you should be able to calculate the adjusted ending capital. Even give you a hint, the ending capital need to be adjusted. Alright, asset equals L plus OE. You see here that you need to deduct away the accumulated depre. Do you notice the accumulated depre that you deducted away here? Also take note that we included the income received in advance and the accrued utilities inside ending capital. Alright, so do take note of that. Okay, after calculating the beginning capital, over here, the beginning capital, as well as the ending capital, we are now ready to calculate our prepare the statement of adjusted profit or loss. All right, so statement of profit or loss for the year ended. All right, so how do we prepare this statement of profit or loss? Just have to help you to recall how to prepare your balance sheet, right? So for this, we actually have to remember how to prepare the owner's equity section of your balance sheet. So in the owner's equity section of your balance sheet, right, you will remember that ending capital. How do you calculate ending capital? You basically take your beginning capital plus your additional capital minus away your drawings and then add your profit or loss. Now you are interested to calculate the profit or loss, so you are going to move everything else to the side of your beginning capital. All right, you move everything to the side of your beginning capital, so it will look something like that. Beginning capital, when you move over to ending capital side, you take ending capital minus beginning capital. Additional cap, when you move over to ending cap side, you take minus additional cap. And then minus drawings, you take plus drawings. Alright, so using this, right, you should be able to prepare your statement of profit or loss. You see that your profit for the year or loss for the year is at the bottom, so you start with ending cap here. You see ending cap, right? Ending cap, then you minus away beginning capital, right? So you should less beginning capital, and then you see here minus away additional capital, right? So you should less additional capital. This additional capital, where does it come from? Can you remember above? We had this additional capital where you invested $20,000. This is your additional capital. So that's why I say don't adjust above, because later on you will adjust it in your statement of profit or loss. Alright, then you can see that you have add drawings. So where is your drawings? Your drawings are over here, add drawings. And you have two drawings, inventory and cash at bank. So this again is from your drawings numbers over here. You have inventory or drawings of inventory, as well as drawings of cash at bank to pay for personal insurance. Alright, and please remember, you should write down the account. Don't just write the number, you should write the account. Right, so the account is inventory and cash at bank. Please write it down. After you calculate, you realize that the answer is a loss for the year 3615. Okay, now the source document and the explaining the accounting theory is quite straightforward, so I shall leave it to you to do this on your own. Alright, all the best in doing your corrections.